the Trump administration is talking a lot to sort of show more, but do less.
So Mourtaza, starting off, 2017 has been a year full of implemented changes for the United States. But looking ahead to 2018, is that also going to be a risky year for the United States?
I think it's going to be a very risky year for the United States. I think the economy right now and the market is very complacent with the US. The economy is showing quite good numbers. 6 months ago, maybe people were too pessimistic, and in fact, 2017 seems to be entering in a strong momentum. But we see now, after the half of the year, momentum flattering, especially on the real estate market. Housing has been going fast and in fact retreating. But I think the most important part is the potential. US is really at its potential, even above its potential. So the potential remaining is mostly on the downside. So at one point, from 12 months to 18 months, the US is going to contract back to a lower potential. So I think the key risk for the US is a slowdown in 12 to 18 months.
And one thing that we haven't really seen yet from Trump's administration is the trade deals and bilateral negotiations. Now, with that in mind, is that so likely to be optimistic for the United States? Is it possible to achieve?
I think those deals are on structural factors, meaning that they will not have an impact on short run, meaning 3, 12, 18 months. We're talking about business cycles, and trade deals not interfere with business cycle. Then it would be more structural growth going 5, 10 years. And I don't see really the Trump administration into really walking the talk. It's mostly talking the talk and maintaining a lot of I would say, air show, but we don't see any material changes. And I don't see how Trump will discuss or change the deal with Chinese. I don't think that the Chinese are such strong power in terms of negotiation, but everybody has everything to lose. Americans are buying cheap stuff from China, and China is exporting and manufacturing a lot of stuff for the US. So I don't see who has an interest to raise tariffs, as it will harm both, and especially it will harm, I think, the Trump voters, popular class that spend a lot of manufacturing goods. So I don't see it really happens. So that's why also maybe I understand why the Trump administration is talking a lot to sort of show more, but do less. Maybe that's the tactic, but I don't see any such things on the trade that would change the cycle and the fact that we have a risk on the downside.
And you have mentioned Trump's administration and Trump specifically talking the talk a little bit more now. One thing that Trump has repeatedly said is that the US dollar is significantly overvalued. So looking ahead, what's the most detrimental thing to the US dollar for next year?
I think the US dollar has been strengthening because of two factors. First is clearly the US economy was strong and ahead of the rest of the world, so interest rates were high and money was pouring in the US. Second is that the Europeans were exporting a lot of capital, especially as their growth prospects were very, very weak. So there was an additional flows of money coming from Europeans. The first factor is going to dissipate. European emerging markets, and especially as mentioned, the US is going a little bit weaker. Cycle more synchronized, meaning that the lead of the US is going to shrink, and maybe there would be normalization of monetary policy around the world, and the interest rate aspect of the dollar would weaken. And so the first aspect is going, I think, to wane in 12 months. Second aspect is European and the prospects and the fact that they're using savings to fund the US. I think this also is going to wane as the recovery in Europe is going to accelerate. And maybe there is a normalization in the ECB policy. We'll see about that. But I think this is the second factor that will not only weaken the dollar, but strengthen the euro.
Great. So do you have a quick target to give us on the US dollar?
Yeah, I think 12 to 18 months, the US dollar, euro dollar, you should reach back 120 at least, and maybe breach the 125.
Perfect. Well, as always, thank you for coming in today.
Thank you very much.
Well, that's all from us here in the Geneva studios, but we want to hear how you found this interview, so please do like and comment on Dukascopy.tv.